Hi, everyone. Welcome to the Timing Research Show for May 11th, 2015. Today we will be talking about the 85th weekly report from Timing Research. If you haven't had a chance to take a look at this yet, just go to TimingResearch.com/reports. My name is David Kosmeter. I'm the creator of Timing Research, and I have Dave Landry here hosting for me again. So I go ahead and turn over the show to him.
Okay, thank you, David Kosmeter, and thanks to TimingResearch.com for having me back again as a host. We got a couple of veterans this week, so glad to see you guys back here. Craig, let's go to you first. Craig Hill of TradingConceptsInc.com. Tell us a little bit about your trading and tell us a little bit about your website, TradingConceptsInc.com. And welcome back to the show, Craig.
Yeah, well, first of all, yeah, thanks, David, and David too, both of you. Appreciate it. And I've been working with Todd Mitchell now in Trading Concepts since I became a student back in 2009. I've been working with him since 2010, and currently moderating his E-mini Success Formula trading room. And we're implementing two different methodologies in there. It's going pretty well. If you go to TradingConceptsInc.com, you'll see we've got a number of different focuses, focusing on the E-minis. Doc Severson is our chief options strategist, and a really great guy. And so we're just moving forward, and we've actually got some things kind of in the back burner looking at some other markets, and so look for those in the coming future. But my main focus is the E-minis. That's pretty much where my main focus is, just on monitoring the E-mini room and focusing pretty much on day trading the E-minis. So that's pretty much it about me.
Okay, cool. All right, Ed Carlson, you're up next. You know the routine. Ed's with Seattle Technical Advisors.com, friend of the show, and I also know Ed through the American Association of Professional Technical Analysts. So, Ed, tell us a little bit about your trading for those of us who don't know you, and tell us a little bit about what you do over at Seattle Technical Advisors.com.
All righty. Thanks, Dave and Craig, and hello to everyone. Good morning or good afternoon, depending on where you're at, I guess. Sure. SeattleTechnicalAdvisors.com, in addition to traditional technical analysis, our specialty is the methods and methodologies of George Lindsay. George was a mid-20th century market master, guru, timing master, whatever you want to call him, and had some very unusual techniques, a real iconoclast, and that's our niche. That's a specialty, and we publish 5 days a week.
Cool.
For subscribers, right?
Cool, good stuff. And George never wrote a book, right?
That's correct.
Just wrote some newsletters, and you were able to dig them all up and put together the methodology. It's fascinating when you look at that, and that you were able to do that with someone who never did get around to writing a book. So cool. All right, let's go back to you, Craig. Well, before we do that, I'm Dave Landry, DaveLandry.com. I believe that you can only predict the short term when it comes to markets, and I'm slotted as a swing trader, but we will stay with positions as long as they continue to move in our favor, and that might even be years. We've got quite a few positions on that we actually put on last September. We have some that we put on, obviously, in more recent times too, but we will stick with those positions as long as they move in our favor. I have a 21-page report on my website you can download. It's under products, and it's under free reports. You can get that there. And also, just a shameless plug, tomorrow night I am doing a webinar, which you can find the link on my site too, under the first countdown. And I'm going to be discussing the webinar. I'm going to be discussing the methodology in detail, explaining to you my theories about the market, and then not only the theories, but I'm going to show you in practice with some live examples. So usually that's a lot of fun. So if you have time tomorrow night, Tuesday, May 12th at 7 o'clock, come by. Also, I do a weekly webinar called The Week of Charts, and that's also free, and you can learn a lot about the methodology there. Okay, Craig, let's go back to you. And I'll ask the questions as it's a twofold question. The first part is, based on any technical fundamental indicators you want to use, would you predict the S&P 500 index will move higher or lower this week? And that's between now and Friday's close of the 15th, and then rate your confidence to that answer on a scale of 0 to 10, with 0 being no confidence and 10 being extremely confident.
Yeah, thanks, Dave. Yeah, you know what? Like you, Dave, I don't try to predict. I more or less react. But just looking at everything, I'm actually going to say lower, and not significantly, unless we start breaking some key levels. But I'm going to say lower. It looks like, so far today we're up at resistance, we could. I'm going to say lower, and I'm going to go with about 7 out of 10.
Okay. Okay, and then we'll elaborate on that in a second here too. Ed, back to you. Based on any technical fundamental indicators you want to use, would you predict that the S&P 500 index will move higher or lower this week? And that's the close of Friday the 15th. And then rate your confidence to your answer to that question on a scale of 0 to 10, with 0 being no confidence and 10 being extremely confident.
Right. I'm looking for a lower market, and I'm going to give it about a 7. What I've spent the last few years doing was taking Lindsay's work to the next step and trying to forecast these highs and lows that he never bothered with. And I've come up with something I called a hybrid Lindsay model. And all it is combining his work together with traditional cycle analysis. Like a lot of people, when I discovered cycles, I got real excited back when I first started studying technical analysis. And like a lot of people, I quickly gave up on them because they have a tendency to invert or to just disappear completely. But once I hit upon the idea of combining cycle analysis, a convergence of different cycles that would tell me there's a turn coming, and then I could combine that with Lindsay's middle sections, which do a very good job of marking highs and lows. Telling you whether that convergence of cycles will be a high or low. Then I was able to come up with a better animal, a hybrid approach to getting these short-term highs and lows. Well, we're in a situation right now where we don't have any Lindsay middle section counts until the early June, and so all I've got are cycles right now. But it looks to me that we're going to go down this week, and we have this cycle convergence coming up on Friday and Monday, this Friday or the following Monday. So I'm saying down, and I'll give that a 7.
7. Okay. Yeah, that cycle thing can be a little elusive, but they obviously do exist. One thing that I like to do with the cycles is just look at the moving averages, and I look at a 10-day simple, a 20-day exponential, and a 30-day exponential, and looking at those, what has me really concerned, and I'll maybe try to share a screen here if possible, but it has me really concerned is that the Russell 2000 has formed a bow tie down. Now, I hate to use the word hope, how that goes, but hopefully it won't materialize. But if you go back and look at the last 20 or 30 years of the market, in fact, and go back and look at your entire history, if you have time, you'll be surprised at how many times that you'll have these interesting trend patterns develop where these cycles begin to change. So hopefully this is working. You can see we have this bow tie, and it just means that the moving averages come together and spread out. There is a lot of support way back here in the Russell 2000, so that's a good thing. But anyway, I don't want to digress too far from the question. We could I forgot that we can come back to this. Let's just take a look. I want to show you something in the S&P 500 real quick. And now, as far as my prediction in the Ps, I'm going to go with up, and I'll show you why I'm going to do that. As a trend follower, and some people call me a trend following moron, I like to err on the side of the longer term trend. And that's one thing that when you're a public figure, you have to be careful not to chase your own tail to try to look smart or anything like that. And I learned that many years ago, back when I was with a prior website in the late 90s. Initially, I was trying to predict every little zig and zag, and then I quickly learned that it's just not possible. So let me just give you my prediction real quick. I'm going to predict up, and I'm going to give it a confidence of 7, and just want to show you something kind of cool here. If you look at about the last 100% move in the S&P 500, you'll see that we only had a few days of daylight, meaning that the highs are less than the moving average. That would mean a downtrend or the beginnings of a downtrend during this entire period. And as I often say, everything works better with trend. You could see that almost every low except for literally maybe like 5 of them, a handful, or above the 200-day moving average. So just a simple trend following system like above or below the 200-day moving average. Not that you want to buy or sell every time it crosses above or below it, but if it stays above it for a significant time, it tends to continue to persist in that direction. So I'm just going to keep erring on the side of the longer-term trend and saying up, and I'm going to go ahead and give it a confidence of 7. Okay, Craig, let's go back to you. And this is where we can elaborate a little bit on the answer to that and anything else you want to talk about. What developing events, and they can be technical or fundamental, will you be watching out for this week that might have a positive or negative impact on the S&P 500 and other U.S. markets?
Yeah, well, what I'm looking for, back kind of Dave, what you're pointing out is you've got, we look at the NASDAQ and the Russell, kind of get a broad market idea, and you notice those actually did put in lower swing highs compared to the S&P. So the S&P is actually a bit stronger right now than the broad market, but we'll see. I mean, if what I'm looking for on the S&P, mainly the futures contract, is if we can break up through 2114 and obviously push new highs, then I think what we've got, where we could see, I have to do my chart here on the futures market. What we could see is a push, maybe even all the way up to 2125, if we can break up through 2114 and up through the all-time highs. But now, we are at resistance in here between 2102 and 2114. If we would it help to show my chart?
Yeah, if you want to, yeah, please. While you're doing that, it just I wonder if you're alluding to this. Maybe I'm reading into what you're saying, but to me, it seems like if this market starts making new highs would beget more new highs because it's a horrible way to trade the markets. But as somebody pointed out months ago on this show, where else are you going to put your money? So it's like as long there you go. Get the charts. Go ahead.
Yeah. So what I'm looking at on the S&P futures market is, see, we've got a lot of resistance in here. I know there's a lot of lines on here, but I've gotten used to reading it. Looks a little confusing at first, but this is some key resistance in here, and what I'm looking for is for this to hold. We'll see if it holds today, and by the end of the week, we've got some room to go back down. I'm still bullish on this market, but by the end of the week, we could trade lower. I'm pretty much bullish above 88 to 94. We start breaking down through this 88, 94 area, then I'll shift my bias, short-term bias. For from a day trading standpoint, looking at the bigger picture, more or less being bearish, but that's short term. That's not like swing trading, because overall, here's your S&P overall. We're still in an uptrend, like Dave said, and we start breaking down through this 204, 4.5. Then chances are we'll end up pulling back to this 198.75. So, but I really don't think we're going to see that before the end of this week. If anything, possibly come back here and retest this 205. Everything is still sustaining pretty decent levels. It's just that we're up at resistance in here. So I figured maybe by the end of this week we might just pull back. We might just end up pulling back a little bit this week. That's all. Maybe come back and retest 2088, 2094 on the futures market. That's pretty much my thoughts.
Okay.
Let's see what happens.
Yeah, that's the thing. It's like we'll see, and that's what a lot of people, when they're newer to trading, that's come up on the show quite a few times, is that we all take educational guesses based on our experience, but the bottom line is we know we could be wrong, and we just have to wait and see, especially as a trend follower. Ed, let's go to you. Same question. What developing events, and they can be technical or fundamental, will you be watching out for this week that might have a positive or negative impact on the S&P 500 and other U.S. markets?
Right. Well, like both of you, I'm still bullish, and these short-term trends, changes in trend that we're talking about this morning, they're fun to talk about. I question just how important they really are to most of us. What I'm looking at here is Friday's high at what was it, 2117. That level's been tested 1, 2, 3, 4, 5, 6 times as of last Friday. If we were to get a close over 2117, and this is the cash indices as opposed to Craig's watching the futures, then I would say that we're off and running again, regardless of my previous comment that I think the market's going to trend lower this week. If we were to get a break of 2064, then that would open up a window to take us down to about 2040. And that's really the extent of what I'm looking at. I'm telling my subscribers, when we get these short-term turns, these forecasts, hey, we got to keep our eyes on the prize, and the prize is a high we're looking for in very late May or the first week or so of June. That's when we're looking for a more important top that we all need to be aware of.
Gotcha. Okay. For those of you who don't know me, I'm a 100% technical trader, meaning that I just look at the charts. I think that we're kind of at an interesting juncture. If you'd asked me this question on Friday, before Friday, I should say, going into Friday, I had a much different answer than today. Things were looking a little iffy. You had a lot of sectors, retail, semis, I can go on, and we're all kind of sitting on the bottom of their ranges, and then they bounced nicely on Friday. So that made all the difference in the world. I mean, like they say in Pulp Fiction, let's not start kissing each other just yet. But it looks like we may have dodged a bullet, at least for now. I'm a little worried about the Russell 2000. Like I just said, it does have a sell signal in place, but we don't rush out and start selling things on a signal until we start getting triggers. We also will stay with positions until proven wrong. I wrote this morning in the column, if I'd have known the market would top around February like it did, and just pretty much go sideways for the last 3 months, I would not have bought any new positions. I probably would have sold all my old positions. But sometimes not knowing is a good thing when you are a trend follower. And we've got some positions that are up. We've got one stock, and I don't want to brag because I'm going to get my butt handed to me as soon as I do. But luckily, it's up 20% today by itself. That's NVRO, and that's one thing we've been watching is this IPO market has been on fire. Not every single IPO, but if you pick your spots carefully, there's been some tremendous opportunities. Second-tier China stocks were long JMEI. Knock on wood, it's doing pretty good for us too in here. So still seeing some opportunities there. So as long as the market can kind of hang in there, and I'm just going to keep stops in place. Commodity-related areas also doing really well. We're long SID in the metals, and that's also a Brazil stock. And we're long another Brazil stock too. It's GFA. Latin America's been doing really well too. So a combination of all that still looks pretty good. There's still opportunities out there. I'm not as excited about retail and biotech and drugs and all these areas that have been in longer-term trends. But if they start making new highs as a trend follower, and some people call me a trend-following moron, I'll be forced in on pullbacks in those markets. So kind of hanging there in the overall market. Bonds have topped. The dollar has topped. And so we need to keep an eye on that situation. Sooner or later, that's probably going to put some pressure on the overall market, but I'm not going to worry about it until we'll cross that bridge when we get to it, I guess. All right, Craig, let's go back to you. What was your best experience so far as a trader, and what has been your worst experience so far as a trader?
Well, I would have to say my best experience is just chart reading. It's just I'm like you. I'm a strictly technical guy, and just understanding the market flow analysis method that Todd teaches, that was pretty much an eye-opener for me. And then knowing what to look for in the charts to identify key support and resistance, and likely turning points, and keeping in mind, first tests usually get a reaction off of, several tests, like even Ed had mentioned, then that support or resistance is likely to be broken. And I would pretty much just say, really understanding the chart, and chart reading, technical and understanding technical analysis would probably be my best. And then obviously, achieving the consistency that I was looking for. Yeah. Worst case scenario would be pretty much putting on too much size. I just think back when one time when I first started out, I made like $6,000 in 2 weeks trading options, and then decided. You
felt like God too, did you?
Oh yeah, I was like, man, I got this thing nailed. I know what I'm doing.
Yeah.
So and back then it was Sears Holding. I did this and put on too much size, and by noon, I pretty much lost 2/3 of it, and I just wanted to curl up in the fetal position and cry like a little girl when I first did that. I'm sure we all have stories like that.
Oh yeah, absolutely.
Yeah, that's pretty much it. Putting on too much size and then taking profits too soon. A lot of this comes up in the trading room where people will say, well, you can't go broke taking a profit. Well, I disagree. You can if you take profits too soon and you don't factor in reward to risk, which can be difficult to do from a day trading standpoint. It's a little bit easier from a swing trading standpoint. But when you're sitting there watching the market from a day trading standpoint, it's easy to take profits too soon. So you just got to be, careful with that. So that's all.
Gotcha.
So.
Okay, Ed, let's go to you. Same question. What has been your best experience so far as a trader, and what has been your worst experience so far as a trader?
Well, I got to think that my worst experience is probably the same as everybody's worst experience. Yeah. It's losing money.
Yeah.
But I'd also like to think that that may just be my best experience because it taught me about risk management.
Yeah.
You hear or you read constantly people are talking about risk management, and they're always talking about, well, it seems to me, my impression is we all learn it the hard way. I don't know why that is. It seems so obvious until it happens to you. Yeah. But once you learn the lesson, and when was it? It was sometime during this big consolidation. One of my forecasts for a top, the market kept on going up, and the other forecast had been quite good, and so I stuck with it in my own personal account. And but finally, I got to a point where I said, okay, I know this lesson. We're going to have to let her go, despite the fact that I've got a forecast for a low coming up, and this thing, even if my forecast for a top is totally wrong, we've got this low coming up, and this thing should turn down. But the fact that I had the discipline to go ahead and make risk management my, number one priority over everything else, I was really proud of myself. And so that's why I say maybe that's also it was also my best experience.
Gotcha. Well, I'm going to agree with quite a bit of both you guys, but I like what Craig said about beginning to using the charts and becoming a technical trader. That was a big eye opener for me and a big thing. And to stop chasing the holy grail and just find something simple that works and stick with it and be consistent. So that's probably the best experience. And anytime I catch a trend and you always learn and relearn lessons, just like Ed just pointed out. And right now, the lesson I'm just kind of relearning and sticking to it is stick with a position until you stopped out and follow your plan. Plan your trade and trade your plan. It's a little cliche, but it's like this NVRO, for instance. We actually had a sell signal in it a couple days ago, but we're long and we have a stop, so we just leave the stop in place just in case that sell signal did materialize, and thank goodness. It didn't, and also the market starts going sideways. I wouldn't want to rush out and buy a whole bunch of stocks right now because the overall market is kind of treading water, but there's no reason to get rid of the existing positions and just continue. If you're a trend follower, continue to follow along. Don't micromanage yourself out of positions and stick with positions. And the real money is in the longer-term trades. Stop trying to look smart. Just follow along, and those have probably been my best experience. And obviously, as I think Ed and Craig both pointed out, making money is also a nice thing. As far as worst experiences, it could either be with me personally, my clients, or on the institutional side. Anytime there's a significant amount of money loss or drawdowns, it never gets easy, but it gets a little easier with time. And then on a personal level, and what I recommend directly on the retail side with my clients is, just be consistent, and you might have to sit on your hands for a while. And that's the beauty of my approach to the market is if we don't start seeing setups, then we just sit on our hands, and a lot of people can't do that. So that's probably that's the worst experience, the drawdowns, but it's also kind of to flip the coin a little bit or flip it, or turn it on its head. As Ed pointed out, it's also a good experience too to know that just continue to follow your plans and know that good times follow bad. And just another quick example, in September somebody quit my trading service, and I asked him why, and he said because there was not enough action for him. And we're in here to make money. We're not in here for action. And right around September, we started seeing tons of setups, and many of those positions we have on were put on way back last September. So a lot of people quit at the wrong time. A lot of people quit during those drawdowns. And as long as you have a viable methodology that's conceptually correct, a simple methodology, doesn't have to be complex, then stick with it longer term. And that's for me on the retail side, that's hard for me, and it's kind of as far as a bad experience or what makes me feel bad is I see these people time and time again. As soon as the market gets a little choppy, they go off to chase rainbows, and they quit right before the market trends. And had they just stuck it out an extra couple of weeks, they would have made a lot of money. But it's human nature, and it is what it is. And I hate that turnover, but I just can't. I guess I can't take the world away. And eventually, my favorite clients are those who go off, chase rainbows, and come back 10 years later.
Hey Dave, can I interject real quick?
Yeah, go ahead.
We experienced the same thing in our live trading room. It's cycles, like Ed focuses on the cycles. It does the same exact thing from a day trading standpoint as what you're experiencing. We'll have 2 or 3 weeks where you can't do anything wrong. I mean, you literally have to try to lose, and all of a sudden the market just cycles, and for 2 weeks it's a little bit more challenging.
Right.
And then people drop out, and all of a sudden, next thing you know, we got 2 weeks where you just 13 days in a row where you can't do anything wrong.
Yeah. So you just have, and you got to take the good with the bad, and you got to tough it out. Ed, I know you have. I'm sorry, Craig. I know you have a prior engagement, so let me go ahead and let you go when you're ready there. So let me just ask you the last question. Anything you want to tell us about Trading Concepts Inc. or any closing thoughts, and then we'll go to you afterwards, Ed.
No, just kind of what I just said there, and like you said, follow your plan. I kind of focusing on the process of doing it right and trading correctly, and not so much as focusing on the money or the points aspect of it, but focusing on the process of doing it right. And I think that's the key. That's the key.
Yeah, I often tell a lot of people on the retail side, trading done properly, at least following my methodology or probably any conceptually correct methodology, it could actually be quite boring. And I think people get into the business for the wrong reasons, and present company included. But longer term, it could actually be kind of boring. But that's okay. It's like once you've been around the block a few times, boring is okay. You no longer need that excitement. Okay, Craig, if you have to go, no problem. But thanks for joining us today. It's Craig Hill from Trading Concepts Inc.com.
All right, thanks guys for having me. I appreciate it. Thanks, guys.
Have a good one.
You too.
Okay. All right, Ed. Floor's yours. I just wanted to let Craig be dismissed there. You had some thoughts?
Right. Well, I did. You early in this broadcast, you mentioned a previous guest who had said something that we hear constantly on financial TV, and that is, where else are you going to put your money? And that's kind of a hot button topic with me. That always gets me a little ticked off, frankly. But I managed to keep my my quiet when you brought that up, and because it wasn't on topic. But just a moment ago, you made a very good point, I thought, and that is sometimes you have to sit on your hands. Yeah. Well, those two concepts conflict with one another. I know you didn't say it was someone else that was talking about where else are you going to put your money. I think you're right. I think sometimes you got to sit on your hands, and it's not a game. It's not looking for action. Right? You don't always have to have your money somewhere. The bank will keep it. And you know what? The really great thing is, although figures of deflation seem to have taken a back seat recently, if we were in a deflationary environment, you'd actually make money by just sitting in cash.
Yeah.
You don't have to be moving all the time.
Yeah, it's funny. It's like early in my career, I couldn't wait to make trades. And now it's like I think really hard before putting capital in harm's way. It's okay I like seeing that big open cash position in my account because I can sleep well as long as I have a lot of cash in the account. When I start putting positions on, that's a different thing, and it's just the opposite of where I was. Just in their defense, Ed, I think their point was not that you should rush out and buy stocks because of that. And on those particular shows, I think my point was that's the absolute most horrible reason to buy stocks, but if they are going up and the market's going higher, it doesn't matter why, even if that is the reasoning. And we all know that trends eventually end badly, and that's something that that's another one of those life lessons that you get in trading, and that's why the money management is so important, and that's why usually in the show we And David Cosman has been really good about getting some good guests on here. Not to brag about us, but us here today. But usually, most people always throw in something about money management, and you could tell those are the guys that are out there grinding it out, because we're just as worried about protecting the capital as we are making some capital. Okay, Ed, let's go back to you, just because it's you and I left. Any closing thoughts? Anything else you want to mention about SeattleTechnicalAdvisors.com?
Oh, I'll just leave you with this. We're looking now at actually what we think is the end of the bull market from 2009. Most people are not acquainted with the name George Lindsay, but an awful lot of folks have heard of his most well-known pattern, that is the three peaks in a domed house. And that is lining up, along with a lot of cycle work, for an important top at the end of this month or the first week of June. And so that's what we've got. We've got it all laid out in a report, the May Lindsay report. And if you're interested, you can go to the website and find an order form for that. But the website is SeattleTechnicalAdvisors.com, SeattleTechnicalAdvisors.com, or you can just Google me and you'll get there. I guess that's it.
Cool.
Thanks for having me.
Well, Ed, glad to have you back. You're a good friend of the show, as everyone here knows, and people out there might know. But yeah, I appreciate your insight, Ed. It's always very insightful. Just to close things up, again, I believe you can only predict short-term when it comes to markets. I also like to take short-term profits, but hold on to a piece for a longer-term gain, and I call it you really can have your cake and eat it too if you're willing to follow what I plan. And then sometimes we talk, like Ed talked about, sitting on cash. Sometimes you have to sit with your positions, even if they're kind of going sideways. And a lot of people think that, oh, it's dead money, but it's not dead money. Sometimes the market consolidates before taking off again. So I would encourage you to do that. Again, shameless plug, if you have a chance, come to the webinar tomorrow night. I don't take myself too seriously. We have a lot of fun in these webinars, and I have a lot of information planned and good stuff. And we're going to use live examples on that too, so that's always fun. So a year from now, you can come back and say, okay, well, let's see what happened with those positions that Dave was talking about. And I like to do that. I like to show the theory, but I also like to show it in practice. I think that's it. Dave Cosman, let me turn it back over to you. Thanks again for having me as your host again this week.
All right, thanks, guys. Just want to remind everyone, you can go to TimingResearch.com/reports to get the current or all past reports. You can also please remember to go to TimingResearch.com/current survey sometime later in the week or next weekend to fill out the next survey. And just want to thank my guests again, Craig Hill of TradingConceptsInc.com, Ed Carlson of SeattleTechnicalAdvisors.com, and we had a couple other people who were supposed to be on today, but they had to cancel, so we're going to have them on again soon, some other time. And Dave Landry of DaveLandry.com. Thanks, guys.
Thank you, David. Thank you, Ed.